Today, we're gaining insights from one of the most successful investors ever. Peter Lynch, the renowned manager of the Fidelity Magellan Fund, achieved an impressive annual return of 29%, significantly outperforming the stock market for 13 straight years. During his tenure, he increased the fund's size from $18 million to $14 billion. He retired early at the age of 46. Now, Mr. Lynch is here to teach us how to earn millions in a stock market crash, an essential skill in the current economic climate.
You should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years, about one.
From 135 to 100, a steal. Then a year later, it was at 18. This company, with no debt, was overpriced. Period. It went down. I did the same thing in my first or second year at Fidelity. Kaiser Industries had gone from $26 to $16. I knew it couldn't go any lower. We bought one of the biggest blocks ever on the New York Stock Exchange of Kaiser Industries at $14. I said, it's gone from $26 to $16. It can't go any lower. At $10, I called my mother and told her to buy Kaiser Industries. It can't go any lower. It's gone from $26 to $10. It went to $6, then to $5, then to $4, then to $3. It happened rapidly, which was unfortunate. If it had happened slowly, I would have still been waiting or working at Stop and Shop. It happened fast. I seized the opportunity. It compressed. At $3, I knew there was something very wrong. Kaiser Industries, a breakthrough for some people. It's very hard to go bankrupt when you have no debts. It's tricky. Some people can't get close to that. It's a real accomplishment. But they had no debt, and the whole company sold for about $75 million at $3. At that point, it was the equivalent of buying a Boeing 747. I said, there's something wrong with this company. I signed for $75 million. I was a little premature at 16s, but I said, everything's fine, and eventually this will work out. And what they did is they gave all their stock away to their shareholders. They gave away the shares of Kaiser Smith. They gave away the shares of Kaiser Aluminum. They gave away the public shares of Kaiser Steel. They sold all the other companies, and you got about $50 a share. But if you didn't understand the company, if you just bought on the fact that the stock had gone from $26 to $16, and then it went to $10, what would you do when it went to $9? What would you do if it went to $8? What would you do if it went to $7? That's the problem people have. They sell stocks because they don't know why they bought them. Then it goes down, and they don't know what to do. Well, do you flip a coin? Do you walk around the block? What do? Are you concerned about the volatility in the financial markets today? Do you think something needs to be done to reduce it? I love volatility. I remember in 1970.
On Friday, I told Carolyn, if the market drops on Monday, we'll go back. We stayed there for the weekend. On Monday, the market dropped 58 points, and my fund went from $12 billion to $8 billion. That certainly gets your attention. In 2 working days, I said, by the end of this week, I'm going to have no fund. I had a lot of options. I was up at the crack of dawn on Monday because the market didn't open until 12 o'clock. It was still 7 a.m. in New York. We spent that day. We played a round of golf in the morning, and then we went somewhere and watched the market deteriorate. And I did come back. I had no choice. I had no choice but to accept the situation. My shareholders would call to ask what Lynch was doing. They'd say, he's on the 6th hole. He's even par up to now, but he's in a trap. This could be a triple bogey here. This could be a bad inning. And I don't think that's what they wanted to hear. So I came back home and suffered with everybody else. Fortunately, I was very consistent. My market went down when I $1,000 in a stock, you can only lose $1,000. I've done that several times. If you're right, you can make $5,000, $10,000, or even $20,000. In this business, you don't have to be right just 1 out of 2 times. You can be right 1 out of 4. It's like tennis. When you're right, you know the company's doing well. They're doing a great job. You add to it, or at least you don't sell it. That's what you do. You can make more money on the upside. I'll flip a coin to tell you whether the market will go to 4,000 this year or next year. Heads means it goes up. There's no doubt about it. But it's a two-headed coin. The market will go up in the next year. That's all I know about stocks. I guarantee you'll be pleased in 10, 20, or 30 years. Stocks will beat money markets and bonds, no question. This is crucial for anyone investing, whether you're looking after a 4-year-old, a 14-year-old, or a 74-year-old. You have to ask yourself, what am I going to do when the market goes down? I've spoken to large audiences like this, and I'll say, how many people in the room are short-term investors? Nobody ever raises their hand. Everyone in the world is a long-term investor until the market goes down. Don't forget to subscribe my channel.